And this video is going to be the practical knowledge will start. I will start just learning. I will start telling you in the teaching you in the live market. So now I have taken a trade. This is a demo account. Don't worry about it. This is a demo account just for teaching purposes. Now the balances you can see here, and you can see the trade. So now the trade is taken at GBP GPY. The trade is for a buy order. Now what I want to explain you in this video, you will be learning technical analysis, which I will be explaining why I took this trade. Number second, you will learning the outcome of this trade. Is it be profitable or is it a loss? So you will be learning averaging method. You will be learning quantity method. You will be learning psychological things, probability perspectives. So now my risk per trade is 100. I say 2%. Let's say 2%. So 2% of 5120 is around of 100 hours. So now my risk 100. I have put only 50 in the trade, $50 as risk in the trade, and my target is 1:2, round off to $80. So now my risk is 80. So what I did is that my actual place for entering was this trend line touch. So it didn't touch the trend. I bought it early because sometimes it gets from this support level, this structure level. Okay, so now I have taken it at that point some quantity, and if it goes from this, I will be like earning 2%. And if it comes down, I will be adding quantity. That will call the averaging method, and I will be earning 4%. So it's just like I'm not missing the opportunity. I am capitalizing on the opportunity. So this was the perspective of the trade. So now first I will explain you technical analysis because most of you are interested in that. Okay, technical analysis. So let's start from technical analysis. Okay? This video is for those who are struggling with live trading. Means they perform good they perform good in demo account. They perform good in demo account, or but they do not perform good in real account. The problem is with psychology. I will be explaining psychology. Stay tuned for this video. First, for the people who can't even who can't just who are beginners, or who are learning the learning phase, who are learning technical analysis newly, I will be explaining the technical analysis. Now let's start from the technical analysis. As I told in my previous videos, bigger time frame, bigger perspective. Okay, bigger time frame, bigger perspective means we have to see for the bigger time frame. What I saw at the bigger time frame, which is 4 hour for intraday player, you can just use any time frame, but it should be like minimum. It should be a gap of 5x your time frame. Let's say my time frame is 5 minutes, so 5 into 5, 5x. 5 into 5, 25. So at least your bigger time frame should be 25 minutes. So I play around a very big gap of 5 minutes and 4 hours. That is a very big gap. Okay, it's just like 50x my time frame, my smaller time frame. So explaining you the trade, let me first go to object list and delete all the objects so that we can re-analyze the chart clearly. Okay, please don't look at the profit. Most of the people will be looking at that. It's just like I can even deposit $100,000 in the account and deposit $1 million in the account. Profit will be same in percentage, but it will not be same in numbers. In $1 million account, this would be like $2,000, not $2,000, something like this, or $200 or $300, $500. So now here, get this. Just start off for us. Look at this. What happened? What is happening in GBP/GPY? So GBP/GPY was having a break of structure. As I called it, a break of structure. How? Break of structure. It was a bullish rectangle pattern. You will learn the patterns, okay, by searching Legend Finance chart pattern. So in that video, I have explained. So sorry for interruption in the video. I have recorded this video after some time. The trade is still open, but the changes that is made is that I have taken a new position in the same trade. So now explaining you, these are all the time frames I have studied and analyzed this trade. All the time frame. This is the 5 minute, this is the 4 hour, and this is the 1 hour. Okay, currently the trade is running. You can see here the risk is now of 100 and the profit is of 200, like 150 to 200. Now going to the analyzing from the 4-hour perspective, as I told you, there is a support. So now what can happen that as I told you, after means a structure break, market 90% of the time, 90 to 80% of the time, market retests the structure. So on that concept, this trade is based upon. Okay, so now the concept that is used here is that this was a break of structure, this and this was a break of structure. So now when it break here, I want it to retest this structure. So to retest this structure, it needs to go to at least this level, or at least mini to mini this level. Okay, so these two levels are the break of structure levels. Now the third thing is that This trade is quite a risky one. So why is it as a risky one? Because you can see I'm trading against the like short-term trend, or you can say the pattern trend. Means this is a head and shoulder. Okay, this indicates that the trend is changed. So now I am trading against the trend. So it is quite risky, but quite rewardable also, because this trade has more confirmations. Now going to the 5 minutes where the psychology and the things begin. Okay, now here just look at it. I want you to pay your full attention here. Let me just go through 3 to 50. There we go. So this is quite hard for you to understand because I'm explaining you some higher terms. So now here is liquidity. Okay, from this level the resistance begins. By touching this level, this area that is marked as black, okay, here the resistance are taking place. From this place to this place is the open place. Means there are no major resistance which can tackle down the market. So the first resistance is this. So on that resistance, I will be trailing my stop. That's my plan. So following the stoic mentality, what I have done is firstly calculated the risk. So calculation wise, the risk is quite like $100. But by the psychological wise, the risk is acceptable. Okay, because this is a trend line. What I have expected is that the market will go from here to this like this. Okay, and this pattern I have seen the three drivers pattern. One touch to the trend line, second touch to the trend line, and there will be the third touch to the trend line. Now, what are the probabilities that can happen on to the negative side? So the probability is the market will go from here and will just go here. Okay, this is the probability number one. On this probability, will I accept my loss? Yes, I will accept it. Okay, I will accept it as a mistake, or as not a mistake, it's just a part of trading. Okay, as just a part of setup, because my setup is to take on structures, based on structure, so I followed that thing. Okay, so number second probability is that it can go up from here by clearing up the lever to this level and just fall down. Okay, so what my plan is, I will be trailing my stop at these levels here, to from here to here. Both the stops will be here to here, just around these places. So this is the second plan. Now the third plan here begins. If it hit my target directly, I will be accepting it. Okay, or if the market start making structure which shows that it is going to go down. Let's say it makes like this and this a big candle, then I will be booking partial profit. Partial profit. This is the plan number third. Now I have made the plan for the negative side. All the plans are ready for the negative side. The positive plan is only one, it will hit our target. So I accepted the loss in my visualization. I visualized what can happen in this trade max to max, and I have accepted the loss from it. Okay, just as being a part of setup. Now the real trade will start to begin, and we have to just watch on the sidelines. Now going on to psychological parts, remember, you have analyzed so much that doesn't matter. Probability will still be 50-50%. 50% of hitting your target, 50% of hitting your stop. That's as simple as possible. 50% hitting your target, 50% hitting your stop. So now this 50% and this 50%. Okay, this 50% and this 50%. So the thing is, will you accept your loss? Yes, will accept your loss. Is my SL logical? Yes, it is logical because I have placed it this. Is this the setup you have traded before? Yes, this is the wave setup. Wave setup for people who doesn't know, the wave setup is this: first wave, second wave, third wave, fourth wave, and the fifth wave is the longest wave. Okay, this is the reason, and the reason is this is a bullish flag. Okay, and the reason is the resistance begin from the major resistance, so it can go here. That I will be trailing my stops there. So this is the psychological part. Now we have to just watch the trade happen. It can even hit my stop loss. It can even hit my target. So one thing, I'm making a promise to you that I will upload this video even if it hits my SL or target. Just at any, I will be uploading it like 1-2 day after. It can be because of some editing things. So, and this was thing that I wanted to explain you. Now we have to watch the trade. I will be just fast forwarding this so that you can easily watch the trade happen. Okay. So this is responding after the trade. So the trade went quite good. So as you can see, what new thing that I did was, as you can, the trade idea was this, simply based on a trend line. So what happened that this trend line broke down. So what I did, I was here on two positions. So I just exited one here at the cost. You can see this at the cost. Okay, I think this. Okay, huh, yeah, this at the cost I exited because means somewhere I knew that it has to come to a order block. So at this order block, at this point, I placed a new order, new buy order, because I know most of the people will be selling on this trend line breakdown. So on this trend line breakdown, most of the people will be selling. So that's why I bought here, because we need to act contrary to the retailers. So now here there was a liquidity point. So at this liquidity point, I exited the position. As you can see here, also you can see on the charts, this was all the PNL. You can check. The previous thing is, this is now one. Okay, I am recording 1 day after, 1 day after the trade. So this was